Hey, Alan, how are you today?
Hey, it's great to be back again.
You bet. Alan, let's start with an overview. I mean, the market's looking pretty good in cannabis here going into Q1 2019. All of the stocks that are trading in Canada that are U.S. operators in particular seem to be very positive today. Do you have any insight as to why that might be?
Well, I mean, I think people like that GTI acquisition today, getting into Connecticut, and I think for the overall market, it's a reminder that there's a lot of growth ahead. And I add to that as well, Origin House, which used to be Canna Royalty, talking about receiving takeover bids, and I had heard some of that, by the way. And so I think those things kind of, set the tone for optimism here in the United States. And remember, the end of the year was just horrible for these companies. A lot of them came public. Like, look at Acreage. I know people are very excited about Acreage. It comes out at 25. That's 25 US. And then it drops 50%, and now it's back. And so we're seeing a lot of that. I think people are getting a little bit more comfortable with the calendar flip, that some of the selling at the end of the year should be over. I think that's what's going on.
So do you think it's potentially likely that a lot of these Q4 IPOs that came out and promptly underperformed are likely to deliver some good performance in Q1 2019?
I think so, and I think what's going to make this year work or not work for them is just to show big growth. We already know there's going to be big growth among some of the leading Canadian LPs, but just because of legalization and what that means for their revenue ramp. But we have some pretty sexy revenue stories here in the United States, and I think your audience needs to understand things are different. Canada, there's really three markets. There's the medical market there, which is getting pretty mature. There's the new adult use market, which is just taking off, but nobody has supply. And then, of course, there's the global market, mainly Germany, but other places as well. Well, here in the United States, it's multiple markets. We're coming off of a really rough year in California, and so things are probably going to pick up there now that these regulatory issues have been addressed for the most part, or understood better. But we also have a bunch of states ramping up. And, I mentioned GTI earlier, and Harvest is another one I would mention. These companies are just snagging new licenses in Pennsylvania, for instance, and in other states as well. So there's going to be a lot of state-by-state growth. And so we have just that kind of organic growth where they win licenses. Then there's also the M&A aspect. We're seeing a lot of M&A. The MPX Ianthus deal should close, I think, later this month. And then there's also, up in Canada, a couple of SPACs that were done. They trade on the NEO of all places, which has not been a very great place to trade. But there's two SPACs. One of them is buying Columbia Care, and the other one's buying 5 different companies. And these companies have big revenue, positive EBITDA. So I think it's going to be a great year for people focused on both sides of the border.
Sure. Do you think that the U.S. is going to be a little bit more, let's just call it a little bit more effusive in terms of share price appreciation relative to the likelihood of that happening for the Canadian LPs, who are obviously dealing with a much more mature environment and a more competitive sort of backdrop?
I think Canada is going to do all right, but if I had to pick one over the other, I've been saying for a while, so nothing new there, that the U.S. is, and the big difference has become the ability to raise capital that just hasn't been there before. And so better liquidity, we're seeing, so it used to be nobody would want to play with an OTC ticker. Nobody, when I say nobody, it was just for retail investors and not really for family offices or anything like that. And now we're seeing huge volumes in some of these CSE-listed MSOs, multi-state operators, and we're seeing the volumes sometimes bigger on the OTC as well. So we have capital raising and better liquidity, and I think the valuations are a lot better. And just as a reminder, like I always say, in Canada, you can sleep well at night. You don't have to worry about the Attorney General knocking on your door like we do here, potentially. I don't think there's going to be any issues, but you should always be aware of that risk. And because of that, there's going to be a valuation gap. But I've been saying for a while, this valuation gap is way too low, too big on the gap.
You mean the discount of U.S. operating Canadian listed companies relative to Canadian okay. It seems to me that, I mean, if you looked at the OTC volumes increasing, the increasing availability of cash and private placements going into U.S. MSOs, it would seem to me that the issue with the Attorney General knocking on your door at night is becoming more and more a thing of the past. And, I mean, obviously the largest, oldest capital pools are still very much on the sidelines, but it seems that the sort of the mid-market is coming further down into the cannabis space to the point where, you know, is it just a matter of time till Canada loses its sort of monopoly on financing these companies?
Well, when you say on financing them, I mean, there's not a lot of U.S. financing going on. It's all going through Canada, if that's what you mean.
Yeah, well, there's a lot.
We're not seeing any investment banks here raise money.
Okay, well, except for a couple in the case of, for example, Cowen and Company, and some of the...
Not for U.S. companies. There's no investment banking, unfortunately.
Really?
I mean, Cowen's working with Tilray and Canopy, and you know, those are Canadian companies. Cowen's not touching the U.S. really. Okay.
Okay, interesting. So then, in terms of the institutional...
the Bay Street Boys are fine.
Well, they'll be happy to hear that. So then, you think that the investment banking side is going to remain very much a Canadian opportunity and a Canadian game at this point going into 2019?
Oh yeah, I don't think that's going to change until we get some sort of legislative change that makes these conservative institutions in the United States really crystal clear that they can do this. And right now, that's not the case. And so there was actually a U.S. investment bank that was building a research team, and they just ditched it. And it's really, I know Cowen, and you know, they're here and they're doing a great job, but they're not doing the banking for U.S. companies.
Mm-hmm. Okay. In terms of private family offices, they seem to be wading more into the fray in the U.S. side. Like the Schottenstein family we saw is in there, and you know, is that something that we can read into the sort of future going forward, that the lack of a federal framework does not necessarily preclude the participation of larger capital interests in the United States at this point?
That's a good point. I think that's definitely going on. I think one of the interesting things about cannabis is, unlike Bitcoin or something like that, people can relate to it, whether they're you know, adult use consumers themselves, not as likely, but everybody probably knows somebody that's really benefited from medical cannabis. And you know, unfortunately, it's still murky with the new, you know, hemp is legal, but what the heck is CBD? It's to be determined. I think this has been a very frustrating improvement for everybody that there's no improvement yet. But to the extent we see more proliferation of CBD, and we're going to see that through GW Pharma and Epidiolex is one example. But you know, this is a very fast-growing area, so it's getting harder and harder for people not to be aware, not to be touched in their lives by at least a few examples of people who have really benefited from medical cannabis. I hear from people all the time. I guess everybody knows what I do, and so that's what they talk about. And I'm always hearing these anecdotal stories, and I think that helps. There's a lot of mission-driven investing going on among some of these larger family office types. We've seen, you know, there's a woman in Philadelphia, Lindy Snyder, and her father owned, I think, the Philadelphia Flyers, if I'm not mistaken, the Snyder family from, I think, Comcast. I might be wrong about that part. But the point is, that was a little bit mission-driven. And we see that sometimes in CEOs, like Jeanette Vandermeerel, of co-CEO at 48 North now. And we see it in the investors too, James, where people can really relate. They have a personal story, or they know of somebody that has a very personal story where they've benefited from medical cannabis.
Right. Yeah. Well, that I've got to say that's become almost background noise in my universe. Every day, somebody's telling me a story about somebody, aunts, right, uncles, cousins, nephews, returning vets, etc. Changing gears a bit here now. Let's talk a bit about Tilray. Tilray's got some stock coming free trading in the near future here, and we can kind of see that it's struggling here in the $70 a share range. Is that because there's this perceived overhang in Tilray shares coming to the market?
Yeah, I think so. And I think, when that stock came out, I liked the company. I still like the company. And I thought it was, maybe a little expensive. But I said at the time, this company checks every box. And since then, they've probably checked more boxes or gone a little bit deeper. Obviously, they have a partnership with Anheuser-Busch's parent, AB InBev. So there's been, positive developments, I'd say, for the most part. And they're one of the larger revenue generators. But the stock should never have been at 300. It never should have been at 200. And it probably never should have been at 100. So I think it needs to find its equilibrium. And, there's a real disadvantage to having your stock be too expensive because you won't be able to do deals. You won't be able to get people to take your stock. And I think, Tilray may be encumbered a little bit by that. But just so everybody understands, this is not a ton of stock. That company trades a couple million shares a day on average, sometimes as little as 1 million, sometimes 3 million. And the unlock is, I believe, 7.2 million shares or something like that. Plus, that's from a $7 and change financing round from about a year ago, a little bit less than a year ago. But plus, there's other shares that will come unlocked. Privateer Holdings, I don't think will be selling any stock, but there may be some distributions, and those people could sell. We'll see. But these types of events, people pick up on it. They usually sell the stock in advance. So usually, the best time to buy an unlock is like the day before. It's really weird. I don't know if you watch that, but everybody's always afraid of these unlocks, and the stocks will sell off in advance, and then they seem to find their equilibrium.
Right. So in your estimation, is Tilray at roughly, call it $70 a share fairly valued, or is that still a bit expensive in your estimation?
I don't think so.
No? Okay. Yeah, sure.
Well, look, I want to be really humble about this because, I think it's hard to value these companies. And, you can look at things like forward revenue projections by analysts. And if you do that, then you're going to say it's really expensive, and you would turn to some of the other peers, right? It's just the market cap is way higher than the projected revenue compared to its other peers. For example, there's a lot of things that we don't know. Like if you were trying to do the analysis of is Canopy Growth expensive a year ago, you would have said, well, they have this little investment in by Constellation. You could say that might, materialize into something else. Well, lo and behold, Constellation puts a ton of money into the company and takes control over it. So things change. And just like Tilray, like I thought Tilray was okay at 20, and then it should have gone up after August 14th when the market started to take off. And they have a partnership but they didn't get any equity investment or anything like that. So I think the number's lower, but I don't know if and when it gets there. And I will say this, that I'm pretty confident that company can grow into this valuation over time. I don't think it should be here today.
Right. Okay, great. Do you see any other companies out there that you could refer to, Alan, as being a bit of a discount at this point for investors that they might be able to take advantage of?
Yeah, there's a bunch of them. I think, so I came into the year kind of with the thesis that kind of in the middle, some of these stocks were beaten up. It's kind of the baby in the bathwater syndrome. Yeah. And some of the smaller ones too. I think it's going to be hard for investors to wade through. If you take out the top 3 or 4 of the 46 LPs that trade publicly, so you're left with 42 companies, trying to really get a good handle on all of them, that's my job, and I have a hard time with it. So I think it makes sense that there's going to be some oversights by investors. And without naming names, that's where I'm kind of focused in my model portfolios and some of those medium companies. And, I think I said last week, I see the potential for some of them to maybe merge into U.S. companies, and that's kind of a new idea. There's also, we've seen some of these companies do consolidation. Canafarms was acquired by Vivo, that used to be Abcan. We've seen, so a year ago, Afria bought Broken Coast. So we've seen some M&A. More recently, Emblem announced it was going to merge with Alethea. I don't know if that deal will go through, but so we could start to see some consolidation. I think the problem is many of these companies, nobody wants them. So I'm not going to tell you which ones, but we could see some of these companies stay cheap for a while. But I'd like to see, to me, it's disappointing. A lot of these companies have been around since 2014 with their licenses. I mean, I'll pick on one, Emerald. And their revenue is just like nothing. Like, what have they been doing the last 4 years? It's almost 5 years. So I don't want to pick on just them. There's a bunch of companies like this. And I think that some of these companies are really facing an existential crisis. And they need to... And so Emerald, they've already hitched themselves to Village Farms. So they're not in that existential crisis. But some of these other guys that have been around for a while, maybe they need to give up on Canada and just focus on Germany. I don't know. There's definitely an existential crisis.
Interesting. Well, that makes 2019 a great year, I mean, in terms of excitement. And also, I guess this is the year that the Canadian companies are really going to start to be valued on their balance sheets, isn't it? Yeah,
well, I think this is going to be the year where we see positive cash flow. That's been another frustrating thing for a lot of investors. Not so much for me, but the extent of the cash burns have been problematic. I don't mind seeing young companies be aggressive in their spending, in front of growth prospects. But this is the year, and we need to see this week AFRIA reports. I would say we need to see some good cash flow generation there. If they're telling, well, it's not them. If people are going to say, well, AFRIA, and I will say this too, if AFRIA can stand on just Canada, well, they better start getting some better financial performance out of Canada. I think they will. But this is going to be a year where a lot of these companies, they need to start showing smaller cash burns or move into cash flow generation, or they're going to lose their institutional investors.
Yeah. Well, AFRIA is projecting roughly $40 million in top-line revenue this quarter?
Well, the analysts are, correct.
Yeah. Do you think that...
nobody ever seems to hit their numbers, but this is... If they had the inventory and it looked like they did, it seems like they will because there's such a shortage right now.
Sure. All right, Alan, let's leave it there for now. We'll come back to you soon. Thanks very much for joining me today.